But it would seem to me that it's not just tapering that is putting pressure on markets, but basically we have in emerging economies practically no growth. We have a slowdown in China that is much more meaningful than what the strategists seem to think and what the officials, and I point out the officials, Chinese economic statistics seem to suggest. And that obviously puts then pressure on the earnings of multinationals, because most of the growth in the world over the last 5 years has actually come from emerging economies. And so we have kind of a vicious circle on the downside with slowing down emerging economies and inflated asset markets that are now deflating, and they in turn put more pressure on essentially asset prices and on the economies, because a lot of the economic growth was also driven by soaring asset prices.
Mark, we anticipated, or I think at least in the analysis that you've written, that it was going to be the rising Treasury yield that actually killed off a rebound in growth here. But in fact, we've seen 10-year yields decline from here rather than rise. Should we be encouraged by that?
Yes, actually, for the last 2 months, I have advised my readers to buy 10-year Treasuries. I don't like them for the long term because the maximum you can earn is something like 2.65% per annum for the next 10 years. But the Treasuries, I expect it to rally because of economic weakness and because of a stock market decline, because in the last few years at least, whenever the stock market was very weak, there was a flight into quality, that is, into Treasuries. I don't think they're good value for the long term, but for the next 3 to 6 months, probably they are a better place to be than equities.
Mark Bob Parker, good day to you. Mark, as we all know, one issue which is really worrying investors is the question of liquidity and potential defaults in the Chinese shadow banking system. What's your view? Is this a real problem or a problem that the Chinese authorities can handle?
Well, they can handle it probably by also printing money, but it will have, again, unintended and negative consequences. But the problem is real. We have, and I have to stress this, not only in China, but we have globally a credit bubble. Total credit as a percent of the global economy is now 30% higher than it was at the beginning of the crisis in 2007. We have had rapidly escalating household debts, especially in emerging economies and in resource economies like Canada and Australia. And we have come now to a point where household debt is becoming burdensome on the system. In other words, where an economic slowdown